It's about that time of day again. My name is Joseph, Monday evening, June the 4th. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities setting up for tomorrow's trading session. Tonight, I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude oil is bearish with a big narrowing wedge pattern, and that tells me to expect a bullish correction, which I'm then looking for buyer failures for selling opportunities tomorrow morning. The S&P is bullish with a spike in range pattern as well, telling me to keep my eyes open for two possible buying opportunities tomorrow morning. The Nasdaq is bullish with a spike in channel pattern, and that tells me to focus on buying opportunities using traps and seller failures below the moving average tomorrow morning. Gold is bearish and trading at the low of a triangle this evening. That tells me to avoid selling the lows and focus on selling the highs using buyer failures tomorrow morning. Euro is bullish and range bound this evening. That tells me to focus on seller failures for buying opportunities at the low of the range tomorrow. As always, I have a great newsletter in store for you guys and gals tonight. We got plenty of reliable trading opportunities setting up for tomorrow. Before we jump into charts and put this plan together, though, I need to remind you, if you're watching me on YouTube this evening, you can find a detailed description of this entire strategy written out on my blog here at sidewaysmarkets.com. I'll leave all the links in the description of the YouTube video. Also, if you have any questions about anything covered in this video, please remember to post those questions in the comment section below. And if you like what you see, please help support this channel by subscribing and make sure you hit the bell icon so you get notified every time I post another video. And if you really want to stay in tune with everything we do here at School of Trade, head over to the blog at Sideways Markets. This is where all the action happens every day, and make sure you join our mailing list. Give me your name and your email address, and I'll shoot you an email anytime I publish something new. And don't forget, I post exclusive content every day, Monday through Sunday, on my many different social media channels, right? Charts, links, videos, quotes, images, all kinds of different things related to success and day trading. Make sure you guys follow me on social in the lower left-hand corner. How about some charts from tonight? How easy is this? All the charts from tonight's video, you can have them on your computer for tomorrow. Follow that link below the video tonight and download those charts and be ready for tomorrow's session. Speaking of tomorrow's session, upper right-hand corner, grab your free pass. If you're not a member here at School of Trade, I got a great free pass for you to come out and join me as a guest in the trade room. Grab that free pass and come join me here tomorrow as a guest. And if you have any questions, you can always hit me up on live support. I'm always here to help answer all your questions. No matter what the questions are, hit me up on live support on the right-hand side of our website. All right, we're looking good, guys. Hope you had a great weekend. Boy, what a beautiful weekend it was here in Los Angeles. Hope you guys had some wonderful spring, summertime weather. Definitely feeling that weather change, right? We definitely got the tourists back here in Los Angeles this weekend. But the bottom line is we're back for the first full week of the month of June, right? We got a big week ahead of us. So let's dive right in here. Tomorrow's Tuesday, June the 5th. No major news on the calendar for tomorrow. As you can see, there's no major market moving events tomorrow morning. So, of course, my focus will be on the big opening bells, 8:20 opening bell on currencies, right, and metals, 9 o'clock being the opening bell on the oil, 9:30 opening bell on the E-minis. Don't forget about the 10 o'clock shock, top of the hour. We got two minor news reports tomorrow, so that may be the big time of the morning tomorrow, 10 a.m. Eastern time. So watch that tomorrow morning. And then, of course, the transition into lunch at 11 o'clock Eastern time tomorrow morning. So if I had to guess tomorrow, I would imagine that 10 o'clock hour with those two relatively minor news reports, they overlap with what is usually already a very active time of the morning to begin with. So keep your eyes on that 10 o'clock shock tomorrow morning. That should be the time of the morning tomorrow. We see the most movement on the charts. Let's jump right in here. We got a lot to cover tonight. We got crude, S&P, Nasdaq, gold, and of course we'll wrap up tonight on the mighty euro. Crude is bearish, yeah, just a little bit bearish, with a big wedge pattern, and the range inside of this wedge is getting narrower by the moment. So my plan for tomorrow is to focus not on trading inside of this wedge, but trying to get up outside of that wedge and sell back down. And I've got some ideas of where we're likely going to see those trades set up for tomorrow. As you can see here, we are obviously bearish on the chart tonight on oil, right? I've got this trend line coming down off the lows. I've got a trend line coming down off the highs, and you can see this creates this wedge. Now, one thing we always talk about when it comes to a wedge pattern, draw this up a little bit cleaner here for us, is that wedges ultimately tell us a few different things. First, they tell me direction, right? So I can see the direction of this wedge is going lower, so I want to be a seller, right? The second thing is that you can easily see where those two lines come together. That is basically a big target, but really what you want to think about it is it's a major level of support. So think about that wedge, right, where those two trend lines come together is going to be a major level of support, right? The third, and what I think to be the most actionable or most, really the most important piece of information is the fact that when the wedge is really wide, we can trade inside of it. But when the wedge starts getting really narrow, right, as these two trend lines start getting closer and closer together, what ends up happening is nobody wants to trade inside of this area anymore. It's too tight. There's not enough open space for any real big movement. So what ends up happening is people usually tend to back away from trading during that time, and what happens? Price will jump up. Usually, of course, pinpointing some of the big swings, right, as part of that wedge. And then what I look for is I look for a move going back down, right, to retest that low. So the most important components here of a wedge: one, direction. Follow the direction of that wedge. Two, as it gets closer to that area of support, remember, got to be careful, it's major support down there. And three, as it gets narrower, right, as that wedge gets narrower and narrower, right, at first, it's easy to trade inside of it, but once we start getting to that narrow area there, now it tends to jump. That jump, of course, just allows sellers now to sell high, and the target is down right at that level of support. Let's get back to our chart now. Now we can see here, right, this wedge was nice and wide, right, coming out of last week. Now, of course, on Monday, now we're getting down to the real tight area here, right, where this wedge is starting to get really, really narrow. Now, of course, got a big target. I mean, this is a big target all the way down on this wedge, down around $63 a barrel. It's a little bit too early to be calling 63 at this point, right, because we are sitting, as you can see here, on a measured move. If I take a bigger picture look out on this chart, you'll notice I've got one leg, two legs, three legs, and we're kind of sitting right at that measured move. So between the wedge top, or the wedge getting narrower, and sitting at that measured move, it's relatively easy to see why it's in my best interest to wait for price, right, to make a move higher. So where do we think price will like to go? Well, the market's bearish, and so I always want to try to sell at a level of resistance. And I want to sell at a level of resistance at a point where I can get a small amount of risk for a potential big amount of reward. You know, for example, when I look at levels of resistance, I have a level of resistance here at 65.27, right? We call that a reversal line. 65.27. Another level of resistance up at 65.95, right? Those are really the two main, right, horizontal levels of resistance, right? Additional levels of resistance, if I draw in a trend line coming off of this high, right, mark that, right, sorry, off the lows, mark that trend line down. If I bring that trend line up to these highs now, right, you'll notice it creates kind of like a hidden channel, right? And now we have our sweet spot, right? So what I want to do is I want to find an area of resistance so I can sell in a bear market, so I can take a small amount of risk, right, for a large amount of reward. And as you can see, right, we've got a lot of resistance levels here, but if I go up to, for example, let's zoom in a little bit closer here now that you kind of see the big picture here. Right, if I zoom in closer now, right, here's an option, right? There's a level of resistance. The problem here is that if I go up to that 65.27, little bit of risk, right? A little bit of reward. It's not that great. But if I can go up a little bit higher here now, right? A little bit of risk, right? A lot more reward. So it's definitely in our best interest to get this market up, right? Around that trend line, right? Up around that trend line so we can sell it back down in. So that's really what my goal is for tomorrow. And that really has, right, if it goes up or down, I want to see this price kind of get up off these lows so I can sell this sucker back down. We saw a good example, right, of the market getting through the top of that wedge earlier. They're going to have to do a little bit better than that this time around. So let's plan these orders here. Let's plan the potential patterns that may be coming if market goes up, down, or sideways. Now, I'd like to have the market pull back off this low. I'd like to have it go up, right? And when it goes up like this, what will likely happen is buyers will come over and they'll try to buy this pullback, right? And that's a good thing, right? We do expect if this thing does run higher here on strength, moving average comes over, buyers will try to buy that pullback, and for all we know, they could be successful and the market could turn directions. We'll talk about that, what it means to get a reversal in a moment. But for now, though, my plan is I expect those buyers to try to buy that pullback, right? And just like we saw back here, right, where price goes up above the moving average, pulls back, the buyers try, and it collapses. That's a similar pattern I'm looking for here for tomorrow. Expecting those buyers to try to buy. Once those buyers get in on the pullback, we then know where their stops are, and I can look for a buyer failure, which then turns into seller strength. That seller strength comes from sellers who are selling at resistance, but also buyers now who are stopped out of their trades. And then I'm looking for, right, what's called a bear pullback, right, down to that moving average to go from there. So again, I'm looking for the strong move up. That strong move up will give the buyers a chance to reverse this trend. Make no mistake about it. But if they can't reverse it, I'm looking for that sell back down. That will be what I call a two-try rule with a buyer failure pattern. Again, up at a level of resistance, right? We look for these patterns at levels of resistance. From there, once we have that buyer failure, then we look for that strength move back below the moving average. That'll bring the moving average over, and we can sell pullbacks back down, right, to retest that low. Now, as I go over these patterns, I realize that many of you are probably watching this newsletter for the first time. You're not clients of mine. You haven't watched all my videos yet. So let me give you a shortcut. The easiest way for you to get caught up on all the terminology, all the patterns, everything that we do here every night on my newsletter and in my trade room every day, what I want to do is give you a free trading class in the upper right-hand corner. Not to worry, pause the video, grab that link in the upper right-hand corner, right? I promise I'll be here when you get back, right? But register for that free trading class because that free trading class is, again, it's going to be a shortcut for you. So rather than have to go back and watch every single one of my previous YouTube videos, grab that free class, right? And I'll send you a video to go through all the patterns, all the analysis that I use. Trust me, it'll be a great investment of your time. All right, so grab that free trading class. So now, one try, two try, buyer failure, seller strength, pullback, right, back down in. That's if the price goes higher. What if the price goes sideways? You know, what if we come out tomorrow morning and we're seeing the market kind of bouncing around here going sideways? Watch out for that trading range tomorrow. If we see a trading range, and of course we know we have a trading range when we see double bottoms, triple bottoms, right? If we can't see, if the market stops making lower lows, let's put it that way, then we know we have a trading range. If we have a trading range, then we look for a similar pattern up above the high of that range. I'm looking for the price to go up, try once, pull back, try twice, and what I call a two-try range breakout failure. Let those buyers try twice, one try, two try. Once they fail on that second attempt, I'm looking to sell this sucker back down below that range, right? Back down into that range. Also keep in mind here tomorrow, if the market moves lower, I have a spike and channel pattern we've drawn here. You'll notice it's a little bit off. Let me redraw that here for us. There we go. Doesn't need to be perfect, but it needs to be somewhat perfect. Most important thing here about a spike and channel pattern is that all the bears are likely already in off of that strong move down. I'm not going to go into too much detail because we have a lot to cover here tonight, but this is what we call a spike into a channel. You can see the channel forming here as we go. How do we trade spike and channels? Very similar to how we trade the rest of this plan. I want to see it go up so I can sell it back down from there. If price goes lower here in the short term, now we're going to most likely start to be able to use this swing right there, that 27 right to 18 swing right there. What I'll look for is I'll look for a combination of a trap pattern into a failure pattern, failure into strength, strength into pullback. So again, it's a trap pattern above that prior swing, trap pattern, right? Again, you'll learn that pattern in the free trading class. A failure pattern, right? Buyer failure, and then into a pullback pattern, right? As the moving average comes over above. So one thing I hope you can see here right now, whether price goes up, down, or sideways, I'm not interested in selling here at this major level of support. I want to see price get up off these lows, up around the top of that battle zone, so I can look for buyers to fail to give me an edge to sell back down. Now, we touched on this earlier, but what would a reversal look like here? How would a strong bear market like we saw today and last week, how would this turn bullish? Three things we look for: strength, pullback, and strength. First thing is we need to see a strong move going against the trend. Now, let's be honest, right? That strong move going higher, all that really does is set us up now for a sell back down again if those buyers fail at the moving average. The second step is a pullback to the moving average. The third step, this is where the buyers have to show us they mean business. If we see a strong second leg higher, and again, you can see that's not what happened earlier, right? Strong move up, pulls back, right? They didn't get anything going with the moving average. They collapsed back down again. So we see strength, pullback, strength now. Now what do? Now, grab those new highs and create that new channel by drawing off the highs. It's the most reliable way to draw the channel at this point, and then look to buy that pullback. It'll usually be anywhere between the high of that original leg, right, and the low of that channel. Watch that pullback and look for a buying opportunity right off the low of that channel if the buyers can take control tomorrow. So we get the bulls, we get the bears, we get all the situations all planned for. Now all we need to see is what happens next. Don't forget, tomorrow morning, 8 o'clock Eastern time, I'll be there with you right in our trade room. How about the S&P? The S&P is bullish and trading at the high of a spike and range pattern. That tells me to wait for buying opportunities using the 2-try rule at the lows, or wait for confirmation of strength going higher for a measured move target waiting overhead. As you can see here on the chart today, we saw a strong move up in the overnight session, and then boy have we struggled to get through that original overnight high. They failed once, they failed twice, it looks like they're failing 3 times here. But yet every time the market pulls back, buyers are waiting, buyers are waiting. So the chart right now on the S&P is pretty much telling us exactly what to do. Don't try to buy at these highs right now, because unless something changes right in the Asian, London, right early part of the US session, the buyers aren't seeing any value in buying right there. But yet they continue to show us that they like the idea of buying down around this 27.41. Why fight this? Let's look for a buying opportunity down at the low of that range. That's the easy way to trade this tomorrow, and it's already been proven to be effective already. But what if the price goes higher, right? If the price goes higher, we do have, with this strong move higher here, we do have potential for another leg higher, right, up to a measured move up around that 27.57 half, 27.58 area overhead. So that's where the buyers would love to get to tomorrow if they can get the cojones they need, right, to get this thing going higher here. So what's the plan? It's a spike and range pattern. I want to buy at support, right? We're bullish. I always want to buy at support in a bull market. So where is support? Support's down here, right? Let's buy down there. Or if we see strong move up, right, support could easily be right here as well. So we'll find some support levels here to be a buyer, right? Now, as we go lower, because that's the ideal situation right now, as we go lower, I would expect, for example, something similar to this, where we go down once, we pull back, we go again, and then we come up, right? So it goes down, up, down, up. That's what we call the 2-try rule. The 2-try rule has a lot to do with market psychology, right? Anytime we see a strong move in one direction, it usually results in enough momentum to do it again. At that point, though, now the momentum dries up, and we can now start looking for, again, 1 try, 2 try, and then we can look for the buy going back up to retest that high. Sometimes we get really lucky, and sometimes we get this strong move down, 1 try, 2 try, moving average comes over, and we get a failure into a pullback, right? Sometimes we get lucky. Sometimes we see strong move down, let them try again. We then see a failure, right? Again, seller failure into a pullback pattern. Now, sometimes we don't because, for example, back here, right? 1 try, 2 try, that's tough, right? So if we end up going 1 try, 2 try, and then back up from there, right? See, that's not much of a good time to be trading right there, right? I'll look for it 1 try, 2 try, and then up, and then in we go from there, right? Seller failure, right, into buyer strength. Does that make sense, right? So you really want to make sure you try to buy as close to that low as possible. And if you ever get into a situation where, right, it goes 1 try, 2 try, and then back up, just watch down here, because a lot of times, right, it'll pull back and give you one more shot, right, to participate down here. Right, so failure going back in, and then again, if it's towards the middle, wait for the low of that, right, of that range, and look for what we call a trap pattern right from there. Now, what if we go higher here, right? Because that's kind of the obvious, right? The pullback's the easy part, right? What if we go higher here right now? Well, if we go higher here, this is where we got to kind of look for some structure. Now, the key is, if you want to be able to trade above the high of a range, and again, you're going to want to write this down, right? It's also covered in that free trading course, right, in the upper right-hand corner. So make sure you grab, right, that information icon in the upper right-hand corner and grab that free trading course, because we'll go over things like this in that free trading course. The bottom line, though, is we need to see this moving average. It's got to get through these highs. Right, so find that high here now, and we need to see this moving average getting through that high. If we can see that moving average to the high, then we can start looking for, right, the continuation up to that measured move. So here's a scenario I'm watching here for the short term. If we can get a nice strong move higher here, I'm going to try to connect these 2 highs. Connect those 2 highs, bring it down to that low, and find a new channel. My goal with this would be to utilize that prior swing along with the low of that, right, of that channel. That's going to be my goal tomorrow morning if I don't get any option to buy low, right? Now remember, right, this will take some serious strength. This is not going to be a lazy move higher here. So make sure, again, you get that moving average up above the high there. Get that moving average up above that high. Find that new channel, right, and we'll buy that pullback from there. And again, remember, that measured move, right, is coming up next. The one thing you want to stay away from tomorrow is getting sucked into the middle. So if we sit here tomorrow morning like we did a little bit today, right, if we sit in the middle of the range tomorrow, you wait for it. Let it try once, twice, right, and buy down at the low of this range. Or, right, or wait for it to jump, right? Jump, get that moving average up, find that new, right? Find that new channel, right? And then we'll buy the pullback from there. The bottom line, though, is be very, very careful trying to buy the high or trade the middle of this range. Buy the low of that range. And some added clues, I've done a trend line overhead here. I've got it coming in overhead as well, right? So 1 try, 2 try. That's a great kind of hidden level of support down there. And again, watch that measured move overhead as we try to go higher. Last but not least, please don't forget, we do have rollover coming here right around the corner. This is the 618 contract. We're scheduled for rollover later on this week, but we'll see when the volume moves. Once the volume is higher on the 918 contract, we'll then start trading that 918 contract. But until then, we'll focus on the 618. Last but not least here, I think I said it last time, but again, another last but not least, right? How do we reverse? Strength, pullback, strength. If we can get a strong move down below the low of that range, we can find a new channel and we can look to sell off the high of that channel. Just don't even think about selling at the low of that range. Wait for the proof they can break out and then sell down from there. Looking good, guys. S&P is ready to rock and roll. Now what we're going to do is wait and see what we get. How about some Nasdaq? Nasdaq is bullish with a spike in channel pattern. Tell me to look for buying opportunities at the low of the channel, preferably using a trap low below the previous swing lows tomorrow morning. Here's a beautiful example of a spike in channel pattern here on the Nasdaq. Get a strong move up to start today's session. With that comes a pullback and a new higher high, and it's kept on rolling. I'm going to take these two highs, mark up those highs. They appear to fit like a glove with those lows. The midline, as you can see, right, is acting as support and resistance. So I like the look of this channel, right? You can also see I've got a measured move, right, I've drawn in, and it looks like, right, that measured move, one leg, two leg, it looks like we're sitting right about that measured move right now. I debated whether or not I wanted to call this the measured move, because if that's the measured move, right, then obviously we're already there. So whatever you want to call this, whether you want to call it a larger measured move or a smaller measured move, we are definitely seeing one leg, two leg, and we're running into a major level of resistance there. Again, it's a bull market. I want to buy at support. I really don't want to get into a habit of buying at resistance. So my goal is to stay away from being a buyer here and try to buy at a level of support, whether that be a pullback to the battle zone support or whether that be continuation through and then down to support right later on in the session tomorrow morning. So let's dig in a little bit closer here on it. And again, don't forget, we are watching rollover here on all of the E-minis. I would imagine everything except for the, probably the Russell's probably rolling over a little bit later than the others. But Dow, Nasdaq, right, and the S&P all looking at rollover here in the next few days. So keep an eye on the volume there. Now, I've got a great level of support here. That 31.75 is a prior, what we call a reversal line, right? It's a prior swing high. I got a prior swing low here. Really, any of these levels, right, can be used as support. Again, I've got the low of this channel lining up right here too. So this really becomes, right, a really tasty area there, right, to be a buyer. Would love to buy, right, at that area there as well. Or maybe we can play a little bit of a trick on these sellers, right? We can connect those dots there and bring that down and find kind of like a hidden channel there. And that's exactly where I'd like to see us go for tomorrow. So what if price goes up? What if price goes down? What if price goes sideways? Let's prep for it here. We know the buyers have control. We want to see price pull back. Ideally, get below that moving average. And just like we saw right here, one try, two try, strength into pullback, back to retest the high. Doesn't get much better example than that, doesn't it, guys? Right? So if you watch my newsletter frequently, you know these patterns happen all the time. Strong move down, bears try again. Usually it's right at the moving average, right? And I can then look for a strong move up, pull back, right, and go from there. It's a seller failure pattern into a buyer strength into buyer pullback for a retest, right, of that high. Hey, maybe it goes even further, right? Maybe we really see this move going lower, bring this moving average down, right? And of course, we see bears try to take this market lower again, right? They fail. Moving average comes over, right? And we're off the races going back up again from there. As you can see, as long as those sellers don't hold that pullback and run, we're fine to buy nice and low because that momentum of the market will drag the price right back up, right, to retest that high. So watch for that seller failure at the moving average again. Very similar. One try, two try, failure, right? And then back up we go. And then watch for that pullback, right, as we go up from there. Now, what if price goes sideways here? This is definitely viable for tomorrow. We're running right into that measured move, right? So what if we end up going sideways here? Strong move up. We start seeing double tops here at those highs. Then what do? Yeah, same thing, right? I want to see it go one try, two try failure, back up from there, right? Look for that buy off that second try below the low of that range. And then, right, if we can get it going through that high now we can look for that momentum to shift higher, and we can look for a pattern that I call the fake out, breakout, pullback pattern, right? I call it the FOBOPB, the fake out, breakout, pullback pattern. It's a strong move through the top of a range. It's the one try, two try, right? It's a two-legged pullback. I'm going to use that moving average above. Again, key is get the moving average above that high and look to buy the pullback from there, right? If we do get that, watch this now as another measured leg, right? So again, one leg, two legs, right? If we do get that pullback, okay, make sure that you identify where that next measured leg is going to be, because that will be your target as you go higher, right? So if we end up seeing this thing go sideways here, right, we pull back, we go through, two-legged, right? Again, most important thing, get that moving average up, one, two-legged pullback, use that trend line, use that moving average, and we're running, right? We're running up to that measured move from there. Now, the next question is, what if we go higher, right? What if we go higher here? There's a couple scenarios I'm watching here if we go higher. One scenario would be we oftentimes see spike in channels break off into basically additional spike in channels, which may be what we get tomorrow. If we do see the market going higher here now, right, I'm watching for a short-term spike in channel, and I can use the low of that spike in channel there, right? Does that make sense? Okay, that's one option there, right, before that spike in channel. So watch that short-term spike in channel on the way up to, right, that measured move. Another option would be, right, if we end up pulling back here and then running higher, looking for that pullback, right, to use at the low of this, again, this larger channel. You know, remember, anytime we have a trending day, right, this is a trending market, we like to use channels and measured moves, right? So find whatever channel. If we go higher here and we're seeing a real tight, right, narrow channel, buy the low of that channel. Just make sure you get above that level of resistance, right? But if we end up seeing the market, you know, pull back and then run higher, let's use a larger channel there and try to use the low of that larger channel for tomorrow morning. All right, so that's all in the cards here right now. Last but not least, how do we turn bearish? Strength. Pull back to the moving average, right? And strength moving through. What's the plan from there? Do we chase after it, right? Do we chase after it down here? No, we don't. We wait for the market to reverse directions, and we find that new low up to that high, and we sell right off the high of that channel. It'll usually be between that prior swing low and the top of that channel, right about there. Look for that sell. And from there, right, if the bears can take control tomorrow, we can assume they're going to be hunting for that 70-70 area, right? But there's a big move back down to that big round number at 7,000, right, if these buyers lose their grip on this market going higher. Nasdaq, great example here of a spike in channel, just waiting to buy the dip right now on the NQ. Let's keep going. How about some gold right now? Gold is bearish and trading at the low of a triangle or range this evening, telling me to stay patient for most reliable selling opportunities using the 2-try rule to sell off the high of the range tomorrow morning. As you can see here right now, I've got some lower highs, I have some higher lows, right? I've marked up the middle of that triangle as kind of the no trade zone. We have a bear market going into that trading range, so it's a bear bias into a range. We're not seeing lower lows, right? We're not seeing higher highs. The moving average starting to flatten out. These sellers are definitely in control, but they're struggling, right, to push through that measured move that we found, right, coming out at the end of last week's session. So what's the plan here? Well, ultimately, this is nothing more than a strong move down into a trading range. this example I'm drawing for you right now has kind of a short-term range with double tops and double bottoms, right? We're going to sell above the high, right, of that range tomorrow. This example, though, you'll notice is a spike in, right, basically a spike in triangle, where we have some higher lows and some lower highs as the market, right, works its way sideways. The key now is to find those prior swings, find kind of the edges of that triangle, and look to sell up around those edges. That's where the best trades are going to be to the sell side. At the same time here, if you like a little bit of danger in your world each day, you can find those prior swings, right, and try to be a buyer off of those lows as well. But remember, it's a bear market. So if you choose to be a buyer in a bear market, make sure you wait for the proof before you go starting to buy it, right? Let's talk more about that as we go here. So let's play both sides of this. There's my trading range. There's my lower highs and my higher lows, right? So let's dig in. We have our lower highs and our higher lows. So what's the plan here? Well, I want to stay away from the middle, try to avoid the middle, right? The middle will always be the choppiest. Stay away from that middle. What I'd like to do is go back up to the highs here, right? And you'll notice, right, this pattern stares out at you. We go up, we pull back. It's tough to see, but this candle ended as a doji, but there's a big wick to the top of it. So we go up, we pull back. Buyers try to buy it. They fail. They collapse into a pullback as we go back in, right? So one try, two try, failure, strength into pullback, right, as the moving average comes over, right, and we look for that sell going back down in. Again, one try, two try, failure, strength, pullback, and then back into that range. Now, if we go lower and we want that same pattern, a little bit different now. One try, two try. Now, instead of being a buyer off of that seller failure, letter W pattern, now I want to wait for this. I want to wait for it to go back above the moving average and buy it from there. In other words, wait for proof. So wait for it, again, as we go one try, two try, get that moving average to come over, right? Remember, don't sell this move, don't buy that move higher, or don't sell down here either, right? You have to lower that range. Don't buy this move higher. This move higher is not going to be as reliable as you want it to be, because a lot of times what happens is you've got sellers waiting up here to trap, right, and sell it back down again. So you don't want to make that mistake, right? What you want to do is you want to wait for it to run and then grab the pullback, right, on the way up from there. That'll be a whole lot more reliable pattern for you if you want to be a buyer in that bear market. So stay away from the middle, up, buyer failure, back down in, right? Buyer failure, seller strength, seller pullback, back down in. Avoid the middle, down to the low, one try, two try. Avoid the temptation. Take the failure because you don't have the edge. The edge is for the bears right now. So you can't sell that failure, right? What you want to do is wait for the failure, up, pull back, and go from there. That way you have the proof you need, right, to be able to buy that move going back into that range again. Last but not least, how do we break out of a range? Well, to the upside, strength, pullback, strength. We have to see proof these buyers are running above that range. Do not make a rookie mistake and think that a strong move higher is enough, because look at how strong these moves higher were, right? Look at how much strength there was going higher. That didn't mean anything, right? It went up, big strong move, didn't care, dropping back in. Goes up, big strong move, didn't care, dropping back in. So don't assume a strong move is going to produce another leg here, right? It usually does, but not when the market's bearish, right, and in a range. Wait for that pull back. If they fail, bingo, back down into that range. If they hold, now we can hold. Now we found that new channel, and now we go looking, right, for those buying opportunities using that support level off the prior swing and off the low of that channel. Same thing to the downside, right, if we can break down below that low. Be very careful buying high, selling low. I want to buy low, sell high whenever the market's range bound. And because of a bear bias, I really want to focus, right, on selling at those highs. Last but not least tonight on the euro is bullish and trading near the middle of a range this evening, telling me to look for buying opportunities using the 2-try rule down near the lows of the range tomorrow morning. Now, we've talked a lot about this so far, right? But let's take a big look at the picture here, and let's see if we can figure out what our strategy is going to be for tomorrow. We have a strong move higher, right? This, of course, was middle of the week last week, end of the month, right, of May. And then you'll notice we go up. We haven't quite been able, right, to get much going here. This is the same trading range we had ultimately until the end of last, right, up until what we got here, Monday, Friday, Wednesday, Thursday. Yeah, so ever since Thursday's session last week, we've had that trading range. Gold is a bear market into a trading range. The euro is a bull market into a trading range. So now we know the bulls have, right, the control. The bulls have the edge. A beautiful example of what we call the pendulum swing. Right, the amount of the movement below the range was almost identical to the amount of the movement above the range. Okay, it's a very good sign that everything is in balance right now. The strategy is dependable. Another big clue here is this short-term channel going higher here as well, because what we see here, bit of a trap low. These guys may try one more time, right, to make that second try outside of that range. So a couple things here. Bull market into a trading range. Pendulum swing on both sides. Bull channel going higher. How do we play this? Well, the reality is we're about as balanced can be. There is definitely an edge to the side of the buyers, but it's dwindling, right? The last time we saw a bull market was basically last Wednesday, right? So it's been a while since these buyers ran this price up. So we should be able to buy and sell, buy the low, right, and sell the high with almost the same effectiveness here for tomorrow. So, of course, I want to come down to buy the low. I want to go up to sell the high. I want to stay away from the middle if at all possible. And let's plan it out. What if price goes up? What if price goes down? What if price goes sideways? Now, we've got this spike into a channel here. That's a really big clue. We'll probably see the buyers try one more time. My plan, as you can imagine, right, is to look for, and that's not what I want to do, right, is to look for price to go up, right, price to go up, get that moving average come over, let those buyers try again. Once they fail, buyer failure, moving average comes over, right, selling back down into that range from there, right? So buyer failure, right, seller pullback, back down we go. Okay, now make sure you get a nice strong move higher, get outside that range so we can sell it back down in again. On the opposite side of the screen, right, on the opposite side, down at the low of that range, I have a channel or a trend line coming out of the lows here, right? That little trend line I've got drawn in there off the lows. So that's a definite area of interest here for me, right? Watching that trend line down there, right, inside the middle of that battle zone. One try, two try, right? One try, two try. Sellers, of course, failure into strength, strength into pullback, right? And pullback we go. You can see the exact same pattern right there. One try, two try, strength, pullback, back up into that range, right? I'm not making this stuff up, guys. These patterns happen over and over and over again. And if you want to get kind of a deep dive into these patterns, right, don't forget, grab that free trading class in the upper right-hand corner, grab the little information icon, and you can learn all about, right, these patterns that we talk about every night on our newsletter, right? So up, one try, two try, failure, strength, pullback, back down in. One try, two try, failure, strength, pullback, back up in. Other than that, the hardest part about a range is to stay in the middle, right? Stay away from that middle, right? So keep that no trade zone on there. One try, two try, failure, strength, pullback, back in. One try, two try, failure, strength, pullback, back in. Same patterns, right? Same strategy. Doesn't matter which market we're dealing with. Let that two-try rule be your guide here. And again, tomorrow, pretty much, I would expect the buyers to try one more time here, right? Nice strong move up, try one more time, then we can look for that failure and then back down in from there. If they continue to go higher from there on strength, we'll look for a new bull channel, look to buy the low of that channel, but obviously that will be after a big strong move going higher tomorrow morning. That will really shake things up. You'll know that. If this market wants to break free of this multi-day range, it's going to have to do it on the back of some serious strength. So watch that strong move going higher. Be very careful, right? Trying to predict breakouts. Buy low, sell high, and avoid that middle. And man, oh man, I just realized we are 45 minutes into this video right now. Thank you so much for tuning in tonight on our nightly newsletter. My name is Joseph, by the way. Like I said earlier, I help new traders, right, profit in today's crazy markets by teaching and trading a simple and effective trading strategy every day in our trade room. You can learn more about our trading strategies by taking our beginner, intermediate, and advanced classes. I've got a great free trial. As part of your free trial, I'll send you an invite on a free pass. Come out and join me in our trade room, and you can always get more information on our website. Call me here in the office. I'll be here all week, right? Hit me up on live support if you have any questions. Don't be a stranger, right? I'm here working in my office here in Los Angeles. I look forward to working with you. I look forward to prospering with you, and I look forward to tomorrow morning, another big day of learning and earning opportunities in our trade room, starting off at 8 o'clock Eastern time. If I don't see you guys tomorrow morning, come out and join me again tomorrow night, same time, same place, usually between 7 o'clock and 7:30 Eastern time. I send out my nightly newsletter, and I'll plan on seeing you guys there. Big day tomorrow. Big day tomorrow. Look forward to having some great opportunities. I'll see you guys tomorrow. If not, same time, same place tomorrow night. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos.